Welcome back to the channel, everyone. The stock market is currently closed as we sit here on Sunday, January 18th, 2026. Looking back at the final minutes of Friday's session, Strive Inc., trading under the ticker ASST on NASDAQ, finished at 95 cents, down about 1.8% intraday. After-hours trading showed a slight uptick to 96, a modest 0.43% gain. This tells a story of a stock hovering just below the dollar mark, struggling despite headlines that might have sent shares soaring in any other environment. Strive recently completed its acquisition of Similar Scientific, which pushed their total treasury to 12,797.9 Bitcoin, making them the 11th largest corporate Bitcoin holder globally. You might expect a surge in the stock on that news, but instead, the market focused on legacy debt of $120 million and an upcoming 1-for-20 reverse stock split. Investors are caught between the growing asset base and a shrinking share price, creating a unique situation for anyone watching this ticker. Retail traders often view AST as a high-leverage way to play Bitcoin. The belief is that if the crypto market rises, Strive will follow with even more intensity because of its treasury strategy. But Strive is no longer just a simple asset manager. It has transformed into a complex financial vehicle, increasingly reliant on issuing new equity and preferred shares to fund growth. Trading volume has been intense, with a battle between long-term believers and high-frequency traders. Institutional players like Yorkville Advisors and Anson Funds hold large positions, often for hedging rather than buy and hold. Their presence provides liquidity, but also contributes to volatility that can catch retail investors off guard. The sector momentum has been mixed. Bitcoin-related equities face pressure even as the underlying asset remains stable, showing the market differentiates between companies that manage debt versus those accumulating assets at any cost. Short interest is a major factor. Recently hitting 32.51 million shares, that's 38.58% of the public float. This shows many are betting against Strive's ability to navigate its financial structure. Borrow rates have spiked, suggesting a tight market for shorts. Firms like Citadel and Jane Street appear active, prepared for moves in either direction. For retail investors, watching the days to cover ratio, currently at 2.3, is critical. A sudden spike in buying could force shorts to cover, causing a rapid price jump, but risk remains high while shares are below $1. Strive was founded as an asset management firm, managing ETFs and advocating shareholder interests. But over the past year, it pivoted into a Bitcoin treasury company, using cash flow from traditional operations and its medical device acquisition to buy more Bitcoin. Avik Roy was appointed Chief Strategy Officer and Joe Burnett VP of Bitcoin Strategy to lead this effort. The strategy aims to create a Bitcoin per share metric that grows over time, similar to MicroStrategy, but on a smaller, more complex scale. Historically, the stock has been volatile. A year ago, shares traded higher, but capital needs led to issuing preferred stock, SATA, with a 12.25% dividend. While attractive for preferred shareholders, this is a cash drain. If Bitcoin rises, the strategy looks brilliant. If not, servicing debt and dividends could become burdensome. Upcoming events like the reverse stock split could influence the stock. While intended to comply with NASDAQ requirements, retail investors often view it negatively. On the other hand, successful integration of Similar Scientific and cash generation from medical products could reduce debt or buy more Bitcoin, potentially supporting the stock price. The macro environment matters too. Active discussions on Reddit and X focus on transparency of Bitcoin holdings and cost basis. The short thesis argues over leverage, while the counterpoint highlights team. Strive building a massive treasury during a period of institutional adoption. Option open interest in February contracts may signal where big players expect the price to go. In summary, expectations from the Bitcoin accumulation and Similar Scientific acquisition were high. Reality shows the costs of aggressive growth. Strive is now a major crypto treasury player, but the stock struggles to stay above the penny stock threshold. Heavy short interest and high preferred dividend costs are real obstacles. The contrast between digital assets and market capitalization makes this one of the most intriguing stories in the market today. Strive has the assets. Now it must prove it can manage the liabilities. Whether this becomes a model for other corporations or a cautionary tale depends on execution in the coming months.